Good morning, everybody. Time for the weekly video. So I had a request to do a video on what are common business expenses. Um, so I want to preface this real fast by just saying this is going to be unique to everyone. And some things can be a common business expense for somebody that might be overly aggressive for somebody else. Um, and everybody has a unique situation. For example, I have one client who has a emotional support pet that they take into their brick and mortar dental practice to be in the waiting room to help kids feel less anxiety before their dental appointment. Well, that means we can write off pet supplies and veterinarian bills versus somebody else that just has a pet that sits at home. uh, there's no real business excuse for that. We have other clients who are social media influencers or they advertise on social media. Well, that means if they're taking selfies and posting on social media, then they can claim modeling expenses like hair, makeup, nails, whatever you do to look good on camera, versus somebody who, like me, I don't advertise on social media by taking selfies. I advertise on social media by talking about taxes. I guess I could say I'm sitting here making this video. I could write off my haircut. Like that would be an excuse. Um, but I'm not posting every day. So there's the example here is pigs get fat and hogs get slaughtered. When we talk about business expenses, really we're talking about what is our risk if we take something as a business expense, because I could probably justify a lot of things as a business expense that are going to be overly aggressive. And if I were to get audited, I'd get slaughtered versus there's getting right up to that line. Well, that line is kind of fuzzy and you have to decide how much risk you're willing to carry. But those are some examples of things that could be aggressive business expenses. A couple others might be break room supplies. So break room supplies like coffee, tea, donuts, bagels, that's a pretty common business expense for most businesses, but it could be considered an aggressive stance for people running a home office. But I offer it because it could be low hanging fruit for negotiations and an audit. So that's something else to consider too. But if you're writing off a vehicle for your CEO, and then you also want to write off a second vehicle for you as through your business, that's kind of aggressive. A CEO doesn't need two vehicles. But I wanted to go ahead and show a couple places where you can get ideas of common business expenses. So every single client I send this out multiple times a year. It's the book I've written, and it's about being an S corporation. So let me go ahead and share screen here. I give this out as a PDF free to anybody who asks for it, but it is available um, on Amazon as a PDF or Kindle. So let me go ahead and share screen here. So this is the PDF copy of my book. So here, there's a couple of things I wanted to show about this. So page 18, we talk about employee benefits. So if you are if you're an S corporation, that makes you a traditional employee of your corporation, you're entitled to employee benefits. If you want to see a really aggressive employee benefit package, look at Google. They offer all sorts of stuff. So that'd be one place you can look. Now you might not have as deep of pockets as Google, so you might not want to be as aggressive as Google. But let's go down and I also have chapter 7, I think, is where I talk about don't lose a single penny. And I just have a whole list of different uh, of different expenses. So 34. So let's scroll down here. So here I just have a whole list of different expenses that could be applicable to most businesses. And I'll just leave this here for a second. I'm not going to go through it, but you can pause the video and read it yourself if you want to. But this is just an example of what could be business expenses. So we have employee benefits. We have a list of different things here. You might have some things that are completely completely unique to you. I also want to go to look at this 36 business expense categories. I've showed this in another video, so this is just through netsuite.com. And they have a list of common categories. So these are things that could also give you ideas of what are common business expenses. So our general rule of thumb is if it is remotely related to your business, it is a business expense. Now, I actually can't tell you what is and is not a business expense, and nobody else can either. You are the president, you're the CEO, you're the manager, whatever, you're the title, that's you and your business, unless you're in a partnership or whatever. But as the primary person leading your business, you're the one that decides if something's a legitimate business expense or not. The same thing happens at any corporation. Large corporations that have lots of employees and they issue out corporate credit cards to their employees, they have an employee manual that talks about what are legitimate expenses. And then typically they have to turn in their list of expenses to the accounting department, who then approves expenses, or their manager, who then approves expenses. And if something's not approved, guess what? It's coming out of your W-2 wages because it wasn't a legitimate business expense. That has more to do with embezzlement than it does with taxes. But the whole idea there is still somebody dictating what are business expenses for the business. And so those are things you have to remember, is like you're the boss. You make the decision if something's a business expense. If you think it's an employee benefit, well, what are employee benefits? We got healthcare, fitness, childcare expenses, all sorts of things. Like I said, just go look at Google's employee benefit package. That'll give you some really good ideas. And if you think it's an employee benefit and you're an employee of your company, you're entitled to that. Now, the thing about employee benefits is you cannot discriminate. And that's what makes it a legitimate business expense. So, for example, you're the CEO of your company and you have full-time traditional employees underneath you, and you decide to have a 100% medical reimbursement plan, meaning anything insurance doesn't cover gets covered by the business. So that's your copay, your deductible, your out-of-pocket medical expenses. That could also include cosmetic surgeries, for example, LASIK. So if you have a 100% medical reimbursement plan for yourself, you can't discriminate on that with the rest of your full-time staff, the traditional employees. So if you provide that to yourself, you have to provide it to your employees too. So if you're reimbursing for your cosmetic surgery LASIK, that means you also have to reimburse for cosmetic surgeries for all your staff. So you just keep that in mind. The only employee benefit that you can discriminate on is health insurance. That was decided during Obamacare, that single member LLC, small businesses that can't afford to get health insurance or are outside of the requirement to get health insurance for their employees because they didn't have the 50 full-time equivalent employees, could still get health insurance for themselves and still take it as a business expense, the self-employed health insurance deduction. That was ruled on back then. It hasn't changed. So the only employee benefit that you can keep and discriminate on is health insurance itself. Anything else you have to provide to all full-time employees if you take it for yourself. So keep that in mind. But that's really about it when it comes to expenses. By law, just as a quick closing here, by law, I'm bound by Circular 230. It's IRS code. And it states that as long as you say it's a legitimate business expense, I have to take it as a business expense unless it's straight up violating the law. There's not a whole lot of things that do that. There might be some things that are more aggressive, and I'll advise you of your risk to benefit on. But when it really comes down to it, as long as you're not straight up breaking the law, I'm still required to take it as a business expense if you have claimed it as a business expense. And that's one of the reasons why it's so important to have a separate business bank account and a separate business credit card, because you make the decision that it is a business expense at point of transaction. So if you're putting gas in your fuel or fuel in your truck or whatever, then you swipe your business debit card. and you're claiming it as a business expense. If you're in Office Max and you're buying printer paper, you swipe your business debit card because that's a business expense. But if you're in, I don't know, Macy's buying clothes, well, now you have to decide, are the clothes you're buying a business expense because you're a model advertising on social media, or is it just a nice outfit you want to wear to go out on a date or something, right? Like, well, that's not a business expense. So you have to make that decision at point of transaction. And if you swipe that card, you're telling me you decided it was a business expense, and I'm not going to argue with you on it because I assume you understand the risks of what that could mean. Anyway, so that is my discussion for today. I hope this helps clear up some of the confusion on what could or could not be a business expense. And it probably really just made the waters more muddy for you. If you have a question, shoot me an email, comment below. Anyway, see you next week.